We're about to have a very honest conversation on the Nigerian economy. Well, we do that all the time. But here, parts of Nigeria facing fuel scarcity right outside. You know, you're seeing this yourself. Nationwide protests are planned for later on this week. Nevertheless, global consulting firm KPMG says things could get better in the second half of the year. It's in its national outlook on Nigeria. The company's report says macroeconomic headwinds could be gradually fading. Very happy to have Mr. Oluwole Adelokun, who is an economist and partner at KPMG West Africa. Good morning to you, sir. Thank you so much for being with us.
Thanks, Rotu.
Fantastic.
Good morning.
Let's get it in. So your report says the headwinds are starting to wane. What evidence do you have of that? What do you see on the horizon that says the headwinds are receding just a bit?
Okay, thank you so much. The reason why we noted that the headwinds are beginning to actually improve slightly is because as you look at the global dynamics that actually impact the world in 2023, things around, the global supply chain has continued to ease. Even trade has begun to actually pick up. According to the EIU report, it actually shows that when you look at global trade, it's forecasted to actually grow by about 2.4% this year. It's meant to further strengthen to 3.5% next year compared to what you have last year where we had a drop of a negative 0.9%. Furthermore, if you think about inflation rate across the globe, it has continued to actually nosedive and then drop. And across the globe as well, you will see most of the central banks are also dropping interest rates, okay? Most of them have actually confirmed 20 out of 30 central banks across the globe have said come mid next year, they will actually drop interest rates. So from a global standpoint, you've seen that some of these headwinds are beginning to actually drop. When you look at the domestic environment, one of the indicators that you actually use to measure confidence in the economy is the PMI. Okay. And the recent reading actually demonstrates there is a confidence in terms of business expansion. As at May, the reading shows 52% relative to 48%. In 2003. So those are the variables that we've considered to indicate to us as we go further into the year, we'll begin to see some changes that are optimism within the economy.
Thank you for that. Thank you for that. On the domestic side, inflation month on month, we did see it decelerate from February to about May or so. But year on year, though, it continues to climb. There's been a lot of talk about it peaking. Are you in that camp that thinks inflation in Nigeria will peak, has already peaked, or could peak anytime soon? What's your view on that?
Our view is that as you think about the macro environment and then you narrow down on inflation, our view is as you go towards the end of the year, as the second half and into third quarter, we should begin to see a downward trend. That's our point of view. And the thinking around this is anchored around 3 or 4 main things. Number one is the base effect. So when you compute your inflation rate, it's actually driven by consumer price index, and you look at 2 periods. So if you look at June, for example, in 2022, and you compare it to June 2023, you will discover that you are starting from a low base.
Right.
As you go into the future, this will continue to decline. The second point that we believe will also drive inflation is the point around the CBN inflation targeting policy to actually drive down inflation. And that is why you've seen increase in MPR to 26.7%, at the last meeting they had. The government is also taking some steps, short-term measure to actually reduce, food inflation, which is actually significant, by suspending import duty across some strategic items, be it staple foods, be it maize, be it agricultural inputs. And our view is that this would actually help to moderate inflation as we go into the future.
Great. Got to talk to you about exchange rates. I mean, there was a time on the cover of This Day newspaper, Nigeria's newspaper of record, we had a big glossy headline, 1,800. It receded down to 1,001. It is climbing again, sir. As of Friday, we have to check, it was 1,006. So now, what about the pass-through effects to inflation? If I take this now against what you've just talked about, aren't you worried? How do you see the FX dynamic playing out?
So if you look at our global economic outlook reports, one of the things we noted very clearly is that the biggest risk to the outlook is the depreciation in exchange rate. So we do understand and recognize that the depreciation in exchange rate would actually have a pass-through effect, on businesses and household. But our view is that as you look at the macro environment, we should be able to have some stabilities. And it's anchor or premise on the following factors. Number one, we believe that the portfolio investors will begin to take advantage of high inflation interest rate that we have in the country. And it's actually evident when you look at portfolio investor that has come into the economy, that's actually increased. I think it's about $2 billion, according to CBN report, which is a marked increase. Number two factor that we believe will also support the FX environment is the point around our external reserve. As of July this month, it actually moved to $37 billion relative to what we had at $34 billion as at the end of June. We also believe that, greater remittance will begin to come in. Then government has also taken a step, to give out a contract about $21 million to meter all, about 187 flow stations in Niger Delta in terms of the pipeline. If they're able to attack that in a strategic manner, that will also enhance our capacity to earn FX. So we believe that we should be able to have some stability over the next, as we go into the future.
Okay, I want to jump ahead to fuel, because you just mentioned the Niger Delta and the pipelines. One of our staff, just right before you came on air, was saying that, there's fuel scarcity outside. So what's going on? She says that in Fagba, they are selling fuel for about 1,500 naira per liter as we speak. I guess because of the scarcity, it's causing things to push up. In your reports, you mentioned that PMS sales coming from the Dangote Refinery may not be the game changer that we expect in terms of price. Can you talk a little bit about that? If we jump to fuel.
Oh, thanks. So our point of view is that when you look at the Dangote Refinery, it's a strategic investment. We're actually in the right direction that we can have such, industry coming in to make such strategic investments. But our point of view is that the feedstock into the refinery is an international commodity, which is, crude oil. Now, as you look at that, it's traded internationally, and it is determined outside the control of the Nigerian environment, So we don't expect that will have a significant impact in terms of drop in price of goods and services. There may be a slight reduction, maybe about 30% to 40%, similar to what we saw, when diesel came into town from Dangote Refinery. I think it dropped from 1,700 to about 1,200.
Right.
But the silver bullet is not the Dangote Refinery. Our view is that as you look at the inflation environment in Nigeria, the major component is the food inflation. So ability to dismantle the barriers, that impact supply is actually the solution to prices in Nigeria. That's what needs to be done. And our view is that government needs to be strategic around that. They need to take, bold steps to actually deal with all the structural challenges impacting cost of, food in the country. We believe that will be the silver bullet, though the Dangote Refinery will help us to earn some dollars and at the same time help to reduce transportation costs. But that is not the silver bullet. What we need is to resolve the challenges with regards to supply that currently exists. And our view is that government needs to do a detailed value chain analysis. As you look at from production to input to packaging to processing to the point that logistics and transportation, you need to study what are the roadblocks and dismantle them. That's what will help.
Thank you. That's very, very detailed. So, the average Nigerian, they spend half their income on food, the other half, I guess, on transportation. Fuel subsidies, what's your view on where things are now? Because, the fact is they haven't completely been removed, right? So what does that do to the fiscal structure of the country?
Thank you for that question. Our point of view, and it's actually an established fact in literature, subsidy in itself is not actually bad.
Okay.
The major problem is the corruption, in subsidy and inability to pay. A recent report that was released in 2003, I think last year by IMF, that did a study of subsidy, especially fuel subsidy, across the globe. It was clear that even advanced economy provided subsidy when it comes to energy. China was the biggest. They spent close to about $2.2 trillion.
Wow.
on fuel subsidy, followed by the US, followed by Russia, followed by, China. So it's actually, even Saudi, they spent close to about $7,000 per capita last year on subsidy. So the problem is not actually having subsidy. The question, is it targeted? Can we monitor it? The second point you raised is around what was the impact on the fiscal structure of the Nigerian economy. Our view is that it will stretch the ability of government to pay. I agree. If we don't manage it in a strategic manner, it will increase our debt service, to be candid. But the question is, what do we need to do? We need to enhance the capacity to earn revenue to actually solve the problem. In the long term, there must be a strategy to face it out in a strategic manner, such that it doesn't cause market disequilibrium. That's our view.
Thank you for that. I have to get your thoughts on minimum wage. They've agreed at 70,000 naira at the federal level, but should the minimum wage conversation be at the states? Before they agreed at 70,000, Edo State had already announced 70,000 months ago. Cross River announced 40,000. So, what's your take? I mean, should the minimum wage conversation be at the subnationals?
Yes.
Yeah.
It should be, because capacity to pay should be a function of your earning capacity.
Right.
I mean, ideally, if every state can afford it, excellent, fine. But the reality is that affordability is a major challenge. Otherwise, if we force the states to move in that direction, we may have instances of job losses, which would then have negative macro impacts on the economic on an overall basis. So it's important that there is frank conversation on because the revenue profile, the resource endowment at the state level is different. So it's important to have frank conversation around, can I pay this? And it's on the basis of that. And labor also needs to also have engaging conversation. How do we enhance IGR at the state level? How do we enhance productivity? How do we add value? And as we move in that direction, then you can enhance the capacity of the state to pay. Having a fixed rate across the country may not be the best from my point of view.
Look, this has been a fantastic conversation. I have so many other questions, but we're unfortunately out of time, so we have to have you back. We have to have you back in the future. Nigeria's economy always gives us a lot to discuss. Mr. Oluwole Adelokun, partner, also economist at KPMG West Africa. Thank you so much for your time.